Good morning, everybody. It's Thursday, June 17th, around 8 o'clock in the morning. Going to quickly run through some charts here. We got the Kitco gold overlay chart. Pretty much looks like we're trading in a range of the past couple days, and we're stuck between the lows and the highs here. You can see there's some good digestion here. If I take a quick look at the intraday chart of gold, we can see we've got this handle wedge pattern forming here. Which is starting to get a little old here. But what we see, what I want to point out here, this is a bullish wedge, so it does point to higher prices. But the one thing that kind of has me somewhat worried is it's riding up on this support trend line, and I think there's a lot of people following this trend line, and that's why it's holding up above it. But what we want to see are these are rallies and pullbacks, like or pauses and then rallies, and we want to see pullbacks into support levels. We want to see surges. Like, this is bullish action here. What we're seeing now is we had a nice big run up, we've got some heavy selling, and it's just kind of drifting up. And this support trend line, I think there's just enough people watching gold who are drawing this pretty simple trend line off these two lows here. I think it's just keeping the market, it's just inching its way up this support trend line, and usually we want to see some type of pullback or like a flag, but instead what we're getting is this angle up as it's inching its way up this support trend line. And a lot of times when it does that, we'll end up with a breakdown. Once it breaks, all these people will bail out, and we're at a sharp sell-off, and that could draw us a new or could test down to the 1200 area. So that's what I'm looking for, and it could be a perfect opportunity to get in. This is what I've been more or less waiting for a while, and so that's what I'm looking for there. As for the other charts, let's pull up the SP 500. This morning pre-market, we're seeing the SP is popped. It's starting to move up again, and we pretty much had the breakout of this main, pretty much a double bottom pattern, and it's traded there yesterday, and more or less sideways. Today we're getting a push up. We might get a push actually into the middle of this noise here, which is around the 1125 area or so. Right now it's trading right at this pivot point, which is pretty much the price has been on it or below it. And I call those pivot points, if it goes through the noise, through the middle of a congestion area, I call that a resistance area. And resistance areas are a little, I find they're stronger, they hold up better. Pivot points they can be broken pretty easy, as the price can drift right into resistance and then roll over. So I don't like to really trade at pivot points. I like to try and catch stuff through a bunch of noise, through clusters of price action, which is where the average price of owners have bought or sold it, and that acts as the resistance, not these pivots where it kind of touches down and then breaks below it. So that's what I see there right now. Yeah, S&P is trending up, and it's overbought. Hopefully we're going to get, I'm hoping we're actually going to get we might get a push up today, but I'm hoping we're going to get a pullback right through this top of these here to the 1195 area, and then that should put the market in oversold condition, and then we can hopefully buy. If we look at the market internals for it, the put call ratio here is down pretty low. During major turning points, it's kind of tough because everybody is bearish, and even though this is really bearish, it's not acting well with the intraday price action. So it's been tough to use the put call ratio. Usually when it's over 1, we're looking for a market bottom, which is somewhat what we're getting, but it's not very accurate for timing at all right now. Anyways, it's dropped down to 0.76, which means people are fairly bullish on the market, and that's pretty much in line. I have a feeling that's why we're having this upward bias, and we can't really use this. Usually when it's down here, we might be looking for a short, which is somewhat what we're thinking, because the market is overbought. But now that we're in an uptrend, we don't really want to short in an uptrend, because a lot of times the market just goes sideways or continues to drift very slowly upwards, and that doesn't work for short. We need something to drop, so we're not looking to short right now. As for the NYSE Advanced Decline line, it's trading a little neutral. Yesterday was in the minus zone. It's kind of interesting. The markets more or less moved up yesterday, but on average there was more stocks on the NYSE that were actually lower. So that's not the greatest sign. It's usually a sign that the market's getting a little exhausted. Maybe if we see a pullback today or tomorrow down into this area, it'll be a perfect opportunity to buy the SP 500 for a swing trade. As for the NYSE trend, we had that low volume rally, our low tick rally here on Tuesday. Actually on Tuesday, and then I figured we were going to get a jump. We did see the prices drop in the morning about 1%, and then they moved back up. The interesting part was there was more distribution of shares yesterday, yet the market still went up. So that's kind of a warning sign that we're getting near a top. And as for the VIX here is trading pretty much at a support level right across these tops. There's a good chance it's going to have a bounce up to around the 30, hit its head underneath this stuff, this price action here, and that'll give us the pullback in the S&P, and then we can hopefully take a nice swing trade and then and ride the market higher. So that's what I see for that. As for the SP 500 daily chart, I mentioned this in last night's report. We had the moving averages cross over here. If I zoom in a bit, you can see I've got these different moving averages, and we had them all cross over. This blue line is above the gray line, which is key. Everything's holding up above the five-day moving average, and it's looking pretty bullish. Pretty much whenever we get a crossover on these moving averages, we see the market do a trend reversal. So if we look back here, you can see it pretty much nails it. I've got different sets of moving averages, which I'm going to be explaining shortly, but usually they give me a heads up, usually 4 or 5 days before the market rolls over, and then there's the green trend line crossover, which kind of gives us more of a swing trade play. Anyways, they pretty much work in favor for pretty major turning points, and the blue and the gray ones usually give us a heads up a couple days before, which is important for understanding how to play the current price action. So right now we're looking pretty bullish. I'm hoping we're going to get maybe a little push higher today and hopefully get a pullback on Friday, and we can buy on the pullback. So that's what I'm looking for there. As for the US dollar right now, it has had a pretty sharp drop this morning. It's still trading in a support area on the daily chart, but it is struggling. But to me, it's oversold right now. It's ready for a bounce, and that bounce could be perfect for a pullback either today or Friday in the stocks, and then hopefully next week we see a move up. So I think everything's kind of aligning here for what we're looking for. We just have to give it some time. Anyways, that's it for now. I'll talk to you guys later.